Morning, everyone, and welcome to, goodness, the first webinar, or our first webinar for 2020. Apologies, as usual, we seem to have a few slight issues with our audio. We've anyway, that's our problems, and David is just sorting himself out. I know you can hear me because he can hear me, and when we switch over to him, we'll see what happens with his headset. But as always, before we start, please can I draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I can see from the list of attendees, we have some of our regular visitors, and I think we have, I know we've got quite a few new visitors. So if this is your first time with us, welcome again. I hope you enjoy what we will do in this webinar. And just very, very quickly, I'm not going to do a load of slides, but just to remind you, here we are. This is obviously David and myself, and we will be looking at the Forex market through the prism of using volume price analysis together with our quantum trading tools. But I don't want to spend too much time on this because having moved the webinar from the much earlier start, we've now got the London Open coming up literally in about 10 minutes. And we just have to have a quick catch up on what's been happening in the overnight session, what is likely to be happening today, and how is that going to affect the price action and the pairs that you are either trading or perhaps thinking of trading. Because as a trader, I suppose the decision we have to make is, do we decide to trade maybe a little portfolio, what we call a portfolio of pairs, maybe 1 or 2, 3 pairs that we really get to know, and then we track, we develop some tactics, some strategies for those pairs, and we wait patiently until the pairs are, the chart is in such, in the state that we can take a trade? Or are you much more free ranging? For example, you come to your computer, you look at the charts and you think, do you know what? I think there's going to be a trading opportunity in this pair today. There's no right or wrong answer to that. It really depends on you. It depends the time that you have available, and to a greater extent, the session that you are going to be that you're going to trade. Now, you are all here for the London session. I mean, that's that sort of speaks for itself. So we know in London, it has 40% of this. It's a 6.6 trillion a day market. 40% of the volume of that flow goes through London. So it's a huge part of this global market. And clearly, the currency that is going to be centre focus, well, certainly it'll be the pound, obviously the euro. But it's a case of, well, what are you going to trade it against? Are you going to stick to the majors, or are you going to perhaps stick, look at some of the cross pairs? And that brings another issue up, and that is that in the majors, and in particular in the euro dollar, there's not an awful lot of volatility. It is it's an all-time low, and you only have to look at the chart for the euro dollar to see that it's really not moving very much on a daily basis. The range is very, very narrow. Now that makes it very difficult to actually trade. You really is a grind to try and take some pips out of the market, and that's when it can become frustrating. So if you're a trader that says, no, I like to trade the euro dollar, and a lot of traders do, because of the spreads that are offered by the I nearly said bookmakers there, by the brokers. They might as well be bookmakers, by the brokers. If you have a pair that's really not moving very much, unless you dramatically increase your position size, then it's going to be tough. If you're still learning this business and you're trading micro lots, which I hope you are, things that are only moved 2 or 3 pips at a time, it's going to be tough. And also you get a lot of whipsawing when a market, a chart is very narrow and in a congestion phase. So what are we going to do? What are we going to look at today? Well, first of all, the first thing to note, let me just go back to the investing.com, is to get a feel for what the sentiment has been overnight as we come into London, because this market is really about sentiment, and it's about risk, and it's about how the currency and currency pairs reflect that, and the money flow, uh, which is what we track and what we try and trade. So for example, the S&P 500 futures, that's your sort of almost your first port of call. Well, we can see here they're down. So obviously it's you know, the market isn't in a good mood, if you like. They've been the futures have been selling off. Why have they been selling off? Do you really have to know? Well, in this case, everyone likes to have a reason. I think here we are. The headline says it all in investing. It's because of the fears over the virus. Quite how that's going to have a major impact at this point on the markets, it doesn't. Who knows? It doesn't really matter. It's one of those. It's one of those situations, the geopolitical situations, that, if you like, the banks that make this market, the insiders, the manipulators, they will use anything, a geopolitical event, to you know, move the price one way or another. And if you think about it logically, the equity market, stock markets have been rising relentlessly since Christmas, are going higher. There have been headlines saying they can't go any higher, this has got to correct. And, you know, maybe this is the event that will make them correct, because it certainly hasn't been the more traditional items of fundamental news like earnings and what have you. So we know it's very much risk off, because the futures have been selling off. So the next thing we have to look, well, how does that actually reflected in the currency markets, the flows into the currencies and currency pairs? Well, the first thing that tends to happen, one of the first things that happens when markets are in this kind of mood, is that you will find the Japanese yen will be bought. Now, David and I have developed these very specialist indicators to help us make sense of, you know, what is going on in the currency markets without having to look at 28 charts, if you like, in all the different time frames. And here we have our currency strength indicator, which disassembles the market into the individual currencies. And we can see here, this is this magenta line, which is yen, which has been bought and having been bought quite strongly in the Asia session. And what we also have is the matrix, which then takes the individual currencies and pairs them, which are the pairs that have been moving most strongly. So if we bring up the yen, we can see here all the good thing about the yen pairs is, because the yen is the counterparty, we can see immediately they all track each other. You know, you don't have to figure out whether it's being bought or being sold. It is being bought, and where it's being bought the most, if you like, is on the Aussie yen. The Aussie yen is a proxy for market risk. Now, the other thing to note about this indicator, not only does it give you this instant insight into what's been happening on the markets in terms of the strongest pairs, the weakest pairs, sentiment, risk, you also have to look at these numbers. And what these numbers tell you is the higher the number, then the more, if you like, momentum, the bigger the move that there has been in this pair. When they're at the bottom of the matrix, as the Aussie yen is here, there is a potential for a reversal. This is just one time frame. This is the hourly chart, which I like to use. As I said, it's my benchmark chart, because I tend to trade the faster time frames. But what the hour also does, it's just a nice time frame to be able to get a look at what's been happening, what is happening, and perhaps what is likely to happen in the session ahead. And I have here, I have the 5-minute, the 12-minute, and I have the daily for some context. Now, we're coming up to London, so obviously let's have a look at the pound as well. David has been looking at the Aussie yen, because the question now coming up in 2 minutes time is this sentiment going to carry through, or are we going to have a reversal? And London is going to say, do you know what, this is all irrelevant. The market isn't, it's just a temporary correction, a temporary sell-off. And in fact, the original trend is going to kick in once again. Now, looking at the pound very quickly, what's been happening to that overnight? Well, the strongest pair has actually been the pound Aussie, which is something I wrote about on my Forex page yesterday. It's a pair that I track quite closely. again, it's one of these cross pairs because it does deliver some great moves and quite, you know, a lot of pips. Sort of, this pair can deliver 70, 80 pips just in one session. Now, the pair that a lot of traders like to trade is cable. But what is cable? Cable is stuck in the middle of this table, and the value is only 7. So I don't even have to look at a chart to know that it is probably in congestion, not moving at the moment. I know we've got London coming up, and the the currency strength indicator also tells me, because the lines are moving in the same direction. So indicators, not only to help us pick up potential trades, but also tell us what is happening now at this very moment on the charts. So give us, if you like, give us a complete picture of what is happening across the markets, really. So I'm going to stay with the the pound Aussie, because the chart for the pound Aussie has actually got some very nice VPA lessons, and also lessons on using multiple time frames, and also using a non-time based chart, which is the Renko. But I'm going to stop there because London is coming. As I say, we've got 1 minute to go. I'm going to keep an eye on this and see what happens to the British pound. Pass over to David, because as I said, he's been looking at the Aussie yen with a view for a potential for a reversal or a re-entry to the downside. So we'll see what happens.
Thanks, darling, and a very warm welcome to you all. Good to see you. Excuse me a moment, I've just got a frog in my throat. Hold on. Sorry about that. Very warm welcome. Just going to show my screen. Can you just check? Can you just confirm that you can hear me? Because Anna says she can't hear me. Hopefully you all. Thanks, Dave. Yes, I know. Always. No, David says he can hear me, so I assume everyone else can. Anna can't for some bizarre reason. So, but great. Thanks, Ezzy. Brilliant. Appreciate it. Thank you all. Otherwise, I'll be talking to myself, which wouldn't be the first time. So. Oh, Anna can hear me now. Thanks, Christopher. Fine. Okay. Brilliant. Hopefully you can all hear me. And you should be seeing my screen. What you should be seeing is basically 6 charts. This is on the Aussie yen. I've got the 3 minute, 5 minute, 10 minute across the top, and down the bottom I've got 15 minute, 30 minute, and over onto the daily. Just seeing London open up, and over on the left I've actually got, I'll just pull this across if I can. There we go. This is on the FTSE 100. It's just opening up. This is just to see what's going on in terms of London sentiment there. You can see no great surprise, bit of a decent move to the downside. Volatility has been triggered, picking up the trend that's really been expressed through markets overnight. If you just head over onto the, sorry, wrong one. You always get rusty when you don't do these very often. Not that we've not done them often, but we haven't done them for about 3 weeks. Let's just, I've changed all these workspaces over as well. Just want to see what's going on in terms of, these are the FTSE, these are the futures, the US futures. This is the YM, the NQ, and the ES. So we're looking at the 5 minute time frame at the top, and down at the bottom we've got the 10 minute, sorry, on the daily. So it's just giving us an instant heads up in terms of market sentiment as the UK markets open. You can see here, this is on the ES, this is the S&P 500. Just pull that over a bit, there we go. This is the fall we've seen so far today. Not that dramatic. And as Anna said, the thing with the media is that it has to come up with a rationale, a quick hook, if you will, as to a reason that a market has moved one direction or the other. They're not going to talk about volume. They're not going to talk about accumulation or distribution, etc., etc. It's far too complicated. They just want a quick hook to say, okay, well, it's SARS, or it's this, or it's that, or it's a geopolitical, blah, blah, blah. That's what they look for. That's what you'll see in the media. It's just a simple, quick-hand, shorthand way of describing what is going on in terms of market behavior, but it's actually all to do with volume. I'll just pop this 5 minute chart up. It's quite interesting. In fact, I'll just pull it over a bit. This was the this was overnight. This is the nice thing with NinjaTrader is it does print in real time. So this is 8 o'clock London time, so we know exactly where we are. It's a bit more tricky on MT5 because the time is not necessarily, it's generally about 2 hours out, purely because of server where the MT4 servers are based. But in terms of Ninja, this is where we are. It's bang on 8 o'clock, London just opening up. This was overnight, so this was 1 o'clock our time, so this is middle of the night for us. Really nice price waterfall here, just a classic example of volume price analysis in action. Rising volume, falling price. It's just what you want to see. You couldn't see it any better than that. And that's really just an overnight trigger. And then what we've got so far, this is 7:30, 7:40 odd, 7:35. We had a big spike in volume, a lot of volatility coming in. What are you expecting to see? You're expecting to see sideways price action as a result of that, because the volatility trigger when it arrives is basically telling you that the price action has moved outside of average true range. And the expectation is twofold: market maker participation, which you can see from the volume, and second, the fact that the price action is likely to either do one of two things. It's either going to consolidate, congest, or it's going to reverse completely and go in a full-blown reversal from primary to primary. In this case, we're seeing congestion. We saw another one here. Quick move to the downside into the congestion phase and a reversal. And the reason it's so powerful for the market makers at any rate is a money-making opportunity, because it plays on your emotional trigger of the fear of missing out. Because when a market moves fast, and I can guarantee you everybody does it, it's very hard to resist. When a market's fast moving and you get a snap move higher or lower, your instant reaction is to jump in, make some quick profit and get out. And invariably, that is what you're doing against the market makers, and the market makers are going to either trap you in the move or they're going to reverse it completely. And it's just a very, very powerful mechanism. And what the volatility indicator does, it shows that in real time. You don't have to wait for the candle to close, it appears instantly. Right, let's just head back to, I'll tell you what, we're going to have a quick look at the currency indices themselves. I've reworked all these, so bear with me for a moment, because I'm not, they're all different now. There we go. These are the 4 currency indices. We've got the yen at the top, is on 5 minutes, that's pretty quick. Got the yen here, we've got the dollar top right, we've got the euro down here, bottom left, and over here we've got the pound. So we're basically at the moment we're seeing selling of the pound. You can see that continuing there. We've got decent buying of the dollar up here on 5. Yen is in congestion at the moment, certainly on this fast time frame. We've got some euro buying coming in as well. So in terms of possible opportunities, certainly on a faster time frame, you'd be looking maybe something at the major. You can see the dollar here is rising nicely. Maybe on maybe against the pound, maybe against something else. We need to go and check out the charts. Right, let's head back over there. Let's go back to the currency charts themselves. There we are, that one. There we are. Okay, what are we seeing at the moment? Let's just pick up where we are. Okay, this is the Aussie yen. We've got volatility, not trading in a trend at the moment. We've got the volatility, we've got the VPOC here, we've got the VPOC here. This is just pop that up full size, make it a little bit easier to see. This was the move we saw in the indices I just showed you. It's reflected, as Anna said, the Aussie yen is a proxy for risk. So in this case, you're going to see yen buying, which is exactly what we saw, exactly the same principle. Not quite such a neat price waterfall as on the index itself. This is all looking still fairly bearish at the moment, and if you were going to trade this, then it's a question of waiting and being patient. The rally here you can see on decent volume, it's not looking terribly strong. I don't see much buying going on at the moment. And if you were going to look at this as a short opportunity, then what you're looking for is really just setting your levels and the point at which you would be comfortable getting into this position. This yellow line here is the volume point of control. That is the fulcrum of the market at the moment. It's basically where, to use market profile terminology, it's where the market has reached price agreement. In other words, there's no heavy bearish or bullish sentiment to drive the market one way or the other. So the market participants, if you like, are quite happy to sit at that level. As we remain at that level, this is the fulcrum, the yellow line, the yellow dash line, and basically that's displaying the heaviest concentration of volume, as displayed on the histogram to the right-hand side. And what that's doing is it's taking this linear relationship of volume and price, which we look at constantly down here, and it's moving it up onto the y-axis here and introducing the concept of time, because what this is displaying is really the length of time that a market is staying in one region, and therefore the depth of volume concentration. And you can think of it in exactly the same way as we do in terms of support and resistance, which is price-based, which is what these levels here are. These are stronger or weaker levels of support and resistance based on price, where a region's been tested or retested several times. In terms of volume, it's exactly the same principle. You might say, well, you know, how do you use that from a trading perspective? Well, it's pretty straightforward. If I pull this chart up here, for example, what we're seeing here is we're seeing a market that's trying to break away from the volume point of control. The trend monitor is bright red, so it's just confirming that it's very bearish at the moment. But where we get down to this region here, where we've got very low volume, the market should move through. Just move the chat box out of the way. Apologies over my screen. There we go. When you get down to these regions here, that is where you expect the market to move pretty rapidly, because there's nothing in the way of volume. In other words, old orders, accumulated orders, people trapped in weak positions, etc., etc. The volume here is very light. So when the market gets down to this region, you expect it to move through there pretty rapidly. It's exactly the same principles as you would apply here. This is a level of what was pretty strong support at that point, which was then breached and obviously became resistance. So that's a very well-defined line on the accumulation and distribution indicator. Basically, the thicker the line, the stronger is that region. And on the MT4, MT5 platform, I know many of you in the room have got obviously the indicators. In terms of MT4, MT5, it's displayed slightly differently in terms of either a dashed line for slightly weaker or a solid line for stronger. So what we're seeing now is this region being tested. And if you're going to jump into this, then it's a question of defining where it is you're comfortable getting in. You may be comfortable getting in there, you may be not. It's a question of waiting, being patient, and deciding on what is your level of risk. But the trend monitor here, as you can see, it's just remaining bearish for the time being. We had a minor transition here, basically reflecting the fact we were in congestion, but it's gone straight back into red again. So it's just confirming we are still very bearish in terms of Aussie selling. And just going back to what Anna was saying about the pound Aussie, what was driving that really was much more to do with Aussie weakness than to do with pound strength. And that's always something you've got to unpick in terms of trading in this market, because this is not a linear market. This is not a market where you're trading oil or gold or a FTSE future or an index future, just keeping an eye on the FTSE 100. Just put it over again for you. It's carrying on down, no great surprise. There we go, over there. So we're down, well down on the open so far. Hasn't got volume on that chart, unfortunately, but I have on others. And that's what we're seeing. So when you trade a linear instrument like a gold or an oil or a silver or a soft commodity or an index future, whatever it may be, you are trading a single entity. When you're trading in currency pairs, you're trading two entities, you're trading two economies. And the key is always to try to understand, and it's why we developed all these indicators, to try and help you understand what is driving that particular move in that particular pair. Because what you're constantly looking for all the time, and let me go over to just keeping an eye on this, just want to see if this breaks the downside, but let me just go over onto the multiple currency strengths, wherever they are. Where are we? Here we go, currency strength, multiple time frame, there we go. What you are constantly looking for is you're looking for this. You are looking for one currency that's moving strongly in one direction and one currency that's moving strongly in another. So, for example, on the pound Swiss, you've got decent selling of the pound and you've got very strong buying of the Swiss franc. So you know for a fact the trend in that particular pair is going to be driven equally on both sides of the equation, and therefore it will be a strong trend. You do get trends in pairs where obviously it's driven by strong sentiment in one of the currencies on that particular pair, and there is often enough to develop a decent trend, but that will never be as strong as if the pair are being driven on both sides of the equation. It's just a fact of life, and it's what we're constantly looking for. We are constantly looking for these sorts of arrangements. We've got strong buying of the US dollar, the red line here. You can see it over here. It's flip-flopping around on this fast time frame, which is 3 minute. But in terms of the others, it's been rising strongly. If you remember back to the index charts I showed you a few minutes ago, that's where we saw that strong buying of the dollar. So we've got a strong buying of the dollar on 5. We've got strong buying of the dollar on 10. We've got strong buying of the dollar on 15. Don't really care why it's happening. It's just a fact of life. That's what we've got. We've got strong buying of the dollar for the time being. What you're then looking for is the opportunity to take advantage of that. And in terms of pairs moving strongly right now, don't even need to look at a chart. This is the New Zealand dollar. This gray line's falling very strongly. So you can see it falling very strongly on 15. It's falling strongly on 5. It's flip-flopping around on this fast time frame here, so it's a little bit of a pause point there. But in terms of a pair that is moving strongly with a strong trend, I can guarantee you that is one. The Aussie pretty much the same. It's falling strongly here. It's falling strongly. Dollar rising. We've got the Swiss franc rising. And what this also tells you is those pairs not to look at. You would not be considering pairs which are moving mid-range, which are oscillating up and down. And in addition to that, you'd also not look at pairs which are moving in the same direction, because as I've said many, many times before, where you've got a pair which is moving in the same direction, for example, the New Zealand dollar and the Aussie dollar, the commodity dollars will generally, not always, but generally speaking, will tend to follow one another around. They will diverge, of course they will, when there's local news, there's interest rate decisions or strong fundamental data, or it's Canadian oil, whatever it may be. But often you will see the three of them moving around together, as they are doing here. So we've got New Zealand, the Canadian, and the Aussie, these three down here. So they are moving pretty much in lockstep together. So in terms of looking at those as opportunities, you wouldn't, because they're moving in the same direction. What that means is there's no differential momentum to drive that currency pair. It's the analogy I've used many times before is the parallel train tracks. Excuse me, so I'm to switch off. We do have two small dogs. I know many of you know them, Bertie and Harry. They do like to join in. Hold on one moment. Apologies, Harry's just been banished to the naughty step. Let's just go back onto the charts themselves. Here we go. See if that's broken down yet. Okay, it's not moving dramatically, but there is that bullish sentiment to it, and it's a question of waiting and being patient. If I just pull this one up, this is on 10 minutes. Look at the volume under this chart. We're now moving into London. So in terms of comparing volume, we can start to compare volume in here because we're comparing light with light. We're comparing the London session with the London session. This phase of price action here, this is through Far Eastern Asia. This was European, so we can compare this here. Now here we're starting to go, starting to move, nice move, starting to break low, starting to break through this low volume here, and obviously be looking at multiple time frames to check out the volume and other time frames. Trading is all about multiple time frames. That's what it's about. It's an absolute fundamental plank of trading that you use multiple time frames, because you will see signals across the piece that you don't see in your trading window, if you like. Here we go. The reason this volume is not building real time is because I've got so much data coming in. I have this clicked off. It only builds on completion of the bar, so it'll fill on close. But other than that, it's exactly as you would expect. So on this candle, you know, this is a nice candle. We've got no wicks top and bottom. We've got good volume underneath. We know there's heavy selling in there, and there's no buying for the time being, so you know we're okay. And then it's just a question of what particular level you want to get in. This was a sign of weakness, as I mentioned earlier on. Market tries to rally, good volume under that candle. Remember, this is in the European session, so we can compare in here this volume here. We can't compare it over here because this is Far Eastern Asia. So Far Eastern Asia, we will be looking at this volume strip here, up to 7 o'clock. Then we get the European Open, increase in volume. Now we're into London and we're seeing a heavy increase in volume. And what's interesting about this particular time frame is if you look at the volume here, what we expect to see on a London Open is the reverse of this. In other words, what we should expect to see if this market is really going to reverse is strong volume at the open, followed by whatever volume pattern then takes shape. What we're seeing here is a pretty lukewarm response to bullish sentiment, which gives you another clue that the market is not particularly strong right now and is like to break, therefore break to the downside, and this is just confirming it. Let's just go up onto, and as you can see here, the trend monitor, the indicators are all helping us. We've got the trend monitor is red, 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 red. It's just confirming everything's bullish. I'm just watching the FTSE. There's a little bit of a rally coming in, but just a few points, nothing too dramatic. Let's have a quick look at US indices, see what they're doing. And if you don't have this live data on your charts, then you can find it all over at investing.com. Investing.com is a fantastic site. It is the site to go to because you will find everything there. Not least of all is live data for this information. If you want to know what bond yields are doing, if you want to know what the bond prices are doing, you will find it there. Just go to the 10-year Treasury, something like that. It'll tell you what yields are doing, and it'll tell you what bond prices are doing, and from that you can interpret immediately what is going on in terms of risk sentiment. You'll find all the commodity prices there, and you'll find all these index futures prices there as well. They're just absolutely key. You have to have this information. This business is about money flow. It's not about anything else. It's purely that. It is so simple when you stop and think about it. It is about money looking for a higher risk, higher return, or lower risk, lower return. That's it. There's nothing else to it. All you're doing is chasing sentiment, and you're trying to interpret what the sentiment is across all the related markets. It really is pretty straightforward when you break it down into that simple understanding of what the financial markets are about. Bit of buying coming in under that candle, you can see it there. Okay, so we had a decent fall. Now we've got some buying coming in. Why have we got buying coming in? Because we've got a deep wick to the body on decent volume. We've got some more buying coming in there. The volume's not great on that one, so maybe it's looking pretty weak. But nevertheless, if you're trading this as an intraday scalper, you're looking for a reaction because you're seeing it in terms of the buying that's come in. There's a lot of resistance overhead there. It's a pretty strong level there. You can see the width of it. It's just telling you it's a very strong level. Got through this, what was resistance at that point has now become a platform of support, but we're trading around the volume point of control on that particular time frame. This is the YM, this is the Dow. And this just brings in another element that these markets trade 24/7. Yes, the Forex market trades 24/7, but then so do indices. They trade on Globex 24/7. The cash markets, the physical bricks and mortar exchanges come and go. They open 8 hours and go. But in terms of, they too trade 24 hours because if you think about it, London's open right now, Europe's open, US markets will be open at 2:30 our time. That goes through to Tokyo, Far East, they're open. So if you like, there's always a physical market or an electronic market that's open and trading and telling you what is going on in the market. Let's just drop back over onto the currency charts. There we go. Okay, a little bit of a pause point. Good volume under that one. That was the London Open. That was the volume under this particular candle. Over onto 30 is a very slow time frame. Just go back to the, where were we? There we are, currency indices, that one. There we are. Wait for that to load. It's on 10-minute. We've still got this very strong buying of the dollar. So if you were trading, nice move on the Aussie dollar. You can see it falling here, this blue line. And here we are up on the dollar itself, on the dollar index. Let's pop that up full size for you, makes it a bit easier. There we go. Bit of a doji candle there, but looks as though it's going to carry on through. So some nice moves to dig out all over the place. This is the yen. We're seeing that yen buying coming back in again. Here you can see it on 10. The yen is starting to rise again. The FTSE has just had a temporary reversal, a little bit higher, but it's still very bearish and not looking terribly well at the moment. Yep. Let me pass back to Anna because I've been rabbiting on for a long time. And apologies if I haven't answered the question because I tend to have the chat box closed while I'm in full flow. Apologies about that.
I just wanted to come back here because, in fact, the pound Aussie is finally starting to move, basically, and it's 20 minutes into the London session. In fact, yesterday the same pair, it wasn't until about 10 o'clock that the main move of the day happened. In fact, it ended up about 80 pips. Doesn't always happen. Sometimes it does sort of take off quite early on in the London session. But just a couple of things when we were looking at David's charts to do with the Aussie yen, and it gave us the answer to this question as to when there's a move on the chart that has been underway. There's always a move on the chart that's been underway for some time, because as David explained, this is actually like three completely different sessions. They all have their own characteristics, clearly, because there's fundamental news, there's local fundamental news that is going to impact the individual currencies. Obviously in Asia it's going to be the yen directly, because whatever in fact, there's been a BOJ monetary statement today. I think Kuroda has been speaking, so that's going to have an impact on the yen. Plus, the yen has this function in this market as being both a risk currency and a safe haven currency, if you like. So it's sold when the market is in the mood, has a higher risk appetite, and it's bought when it doesn't. And you then have the individual items of fundamental use. It happens with Australia, happens with New Zealand. So you will get moves because of those factors. Then you come to a completely different session. You have a whole new set of traders, you have a whole new set of fundamental data that's going to affect another currency. And if you're not aware of this, it's going to make life difficult for you. Now, what you then also have to decide is when you see such a strong move that we've seen, particularly in the Aussie yen, and you know that the session crossover is coming over, can you sort of find an opportunity to re-enter that move? Well, you can if you understand how prices move on a chart. If you understand reversals, if you understand congestion phases on a chart, those areas on the chart when the price is going sideways because it's either waiting for a crossover, it's waiting for an item of news. And what you then use is VPA, volume price analysis, to help you determine whether that is a valid move, in the sense that you're confident in entering that position. And you use that this analysis, if you like, if you're already in a position and the move comes to a pause and it goes into a congestion phase, do you then say, I don't think this is going any further? Do I come out? Well, perhaps if you've got more than one contract on, say you've got two micro lots or three micro lots, well, and you've had some profit, you take part of the position off and you just wait and see. Or if you've only got the one and you decided that, no, I'm going to wait and see if this is going to carry on, and it does carry on, then perhaps you can then add another one. So you use your knowledge of how the price action and volume works in terms of creating the chart structure. If I just expand here, the 12-minute chart, it's part of the reason why we develop what we call the volume point of control, because what it does, it actually highlights the most important area of the chart at this particular moment. If you look at this sort of bulge that you see here on the histogram, moving back earlier, we can see that you see the histogram moves over to the left. At this point, this was highlighting the most important part in terms of consolidation. We only have to look at the left-hand side of the chart that we can see the consolidation phase. The trend monitor sort of dips in and out of the different colors. Then there was obviously an attempt to break away from what was then the volume point of control, because this is a dynamic indicator. It actually, it will move up and down the chart as these areas build over time. Volume point of control is volume price over time. Previously, it was down here, because we can see here the histogram is quite well developed, this little bulge, but clearly at some point it jumped up because this was a longer phase and it was building, there was a bigger build there. So when it was down here, there was an attempt to pull away. I don't, whether that was a tradable breakaway, who knows, but It then go back to test the volume point of control, and then we had the breakout. We've had the breakout from there. We know we've got volume going into that move higher. We've also got the trend monitor moving into bright blue, and we've then had this trend. It's actually a trend, and if you look at it, it has been a trend. There was a nice move higher, supported by some decent volume, before it went back into this consolidation phase. This stayed bright blue. There was a little dip here, but it's been blue, so it is a trend, but it's a kind of meandering trend. It's a very frustrating trend, but it has been a trend. Then we've had the London Open, and we've been waiting to see whether we can have, there's going to be a resumption of this trend, which actually started back here, in fact, at midnight in the Asia Pacific session. Coming to your computer this morning, you would have seen all this. You see that this is in congestion, and you think, great, because what the congestion phase tells you is one of two things. Well, it'll either carry on higher, which it looks like it's doing at the moment, or potentially you will get a reversal. And this is how you also use congestion phases. You don't just use them as for breakaway trading, which we do. And if you, as I said, the volume point of control makes it a lot easier for you to be able to determine whether it's that is likely to happen if you use it together with volume price analysis. But it also gives you the confidence, because this has been moving higher, albeit with quite a long pause point in the way, to give you the confidence to move higher. We've also had some volatility come in this candle here. We know that because we've got the volatility indicator has been triggered. So if you were a little bit concerned, then wait until the candle actually clears the high of this candle. But if we look at it on the 3-minute chart, which is the chart that I use together, and we'll look at the Renko in a minute, we can see the same thing here. This is the congestion phase, and this is the breakaway. Now, normally when you have volatility and momentum, this will tend to move much faster. We know it's not moving very fast, because what we've also use and I use and we've developed is a non-time based chart, and in particular a Renko chart. Now, if you've never come across a Renko chart, it's basically a chart where time isn't the factor that governs this chart. This is all to do with pips, the value of pips. Now, I've actually set this chart. You can set this chart in two ways. You can either set it to a fixed value. In other words, you can have each one of these little bricks completing when 1 pip, 2 pip, 1.5 pip. You set the value yourself. But you can also set it to the ATR function, which is the average true range, and basically the indicator itself calculates what is the optimum pip value. And here we have what the pip value is at the moment. The box size, which is the brick size, is saying one of these little bricks will complete when 4.26 pips have gone through the market. Now, that's actually quite slow. And what it also does, it changes automatically. It will adjust as, if you like, the speed of the pips flowing through this particular pair. They either they slow or they speed up. When I set it up this morning, they were going through at about 3.8. I've had them at 4.7, and at the moment they are 4.26. But can anyone else hear me? Can you all hear me? David says I've dropped out. I've come back. All right. You change it here. You go to a fixed box size, and I've actually got it to 2 pips, so I leave it to 2 pips. If I change that, and immediately it goes to 2 pips, and we can see here. Let's have a look. Go back. How does it change on there? There we are. And I suppose what you're saying is because you've speeded up the pip value, if you like. You want to see when 2 pips have gone through. What I sometimes do is I have both values. So I have an ATR value and I have a fixed value, particularly if it's a little bit sluggish. And what we're looking at the moment is we're actually looking at a very nice break away from, as I said, the volume point of control, certainly on the 3-minute chart that we've got here. let me just move that out of the way. I can expand it. There we are. That's it. We have volatility rising, lots of volume going in there. It's still a little bit stuttery, as it were, but it looks like it is going to go. It does want to move higher. And I know it wants to move higher as well, because I have the 5-minute CSI here, and I can see the yellow line, which is the pound. That's what we like to see. We like to see a nice sort of steep line. The Aussie is still falling. Now, at some point, obviously the Aussie is very oversold. That is that is going to turn higher. So maybe the driver for this pair is actually going to be more pound buying rather than Aussie selling. The driver up until this point has been much more Aussie selling than pound buying, and now the emphasis, if you like, has been switched. What the Renko also does, it also helps you with your entries. The way we suggest, or I would suggest, if you have this indicator, is basically you can see here the periods of the period of congestion, the flip-flopping of the trend monitor, the trend dots moving in and out of their different colors. The blue, the gray is congestion, and the red is obviously bearish. Is basically look at the support and resistance, wait until you get a clear consensus between the dot and the trend monitor, clear of support and resistance. Look at the time charts as well. Do you have volatility? No. And then you can decide to take an entry. And then what happens is, what the Renko will do, it will help to hold you in, because it holds you in. You can then also use it to exit the position as well. And this is for MT5. The way this indicator, it doesn't work in the same way for MT4. You still have the ATR function available, but you have to apply it to the charts in a slightly different way. Now, I've got this, as I said, I've got this on a 2-pip value. We can see it's now moving nicely higher. The next question we want is, well, where is it going? Where's it going next? I've actually got the daily chart. We've got a nice sort of candle, a nice up candle forming here. Yesterday's volume is quite interesting, and we had this, it's kind of a doji candle here. The volume doesn't look anything, but you have to bear in mind yesterday was a holiday, and with volume, when you're reading volume bars, you really do have to bear in mind whether it's been a holiday period, whether one of the financial centres has been perhaps closed because, as I said, because it's been a holiday. So that is all. So you have to read these bars in context and relative to the session that you're looking at. So we've got the high of this candle at the moment. It looks like it wants to move higher. The daily is too far out for me. Let's go back to the hour. This is the hourly chart. Again, and David said the pound is rising nicely. This is the hourly chart. I really need to see some kind of target for the top of this. Sorry, do you want to flick over here? Yeah, have you got the pound Aussie? Oh, yeah, David's got the pound Aussie on Ninja. The Ninja platform is it's a little bit, it's a different platform, obviously, but it's easier to have more multiple time frames on the screen. So I'm just going to move over to David, and I'll leave him to talk through the rest of this pair. And before I go, very quickly, before I leave you with David, the indicators that we've talked about in the session, they're our own, as we said, they're from quantumtrading.com, where you can find more information, MetaTrader 4.5, NinjaTrader, and some are also available for TradingView. And as you can see here, we've got TradeStation coming soon. And everything that we've talked about in this session is we've really put together in the Forex program. It's a fantastic. We know it's a fantastic program. We love the program. We're so delighted with it. We're thrilled that the students who have taken it are doing so well, and it covers everything. It covers the technical, the fundamental, what we call the related market analysis. We talk about oil, we talk about bonds, we talk about the indices and how they all work together to create the price action that you can see on the chart. And the site where you can find more information is quantumtradingeducation.com. But if you need any more information on anything you've heard today, you can drop me a line, Anna@annacooling.com, or david@quantumtrading.com. I am going to go. I will leave you with David to look at the chart for the pound Aussie. We are actually back, but we're going to be back later, much later today than we would normally do our second webinar. For us, it's at 8:15 UK time.
Yes.
Yeah, and that's part of the reason is we have a lot of American students, a lot of American users, and the time that we were holding the webinars really didn't suit. A lot of them were at work, so for us it's great. It means we have the chance to catch up on what's happened in the markets today and look to what may be happening tomorrow. So if you want to come along, it's 8:15. UK time, so maybe we'll see you then. Otherwise, we will see you next time. When that next time will be, we will send you an email, so just watch, look out for it in your inbox, and we will see you then. Take care, everyone. Have a lovely day and enjoy your trading.
Hi everyone. Very quickly, just before we wrap up, I just wanted to show you this because it really just reinforces what I was saying earlier on. I've been looking at the pound Aussie, but actually and we've got the pound here, which is rising. So we've got lots of pound buying. We've got pound buying there, 5 minute, over onto 10 minute, and over to the 15 minute. So we know the pound is being bought universally across the market, and what you're looking for is the best opportunity. And ironically, the pound Aussie is not probably the best because the Aussie is now rising also. So we're seeing Aussie buying coming into the market. So the Aussie is starting to rise with the pound. That's not to say there won't be a trend on pound Aussie, there is, but actually a stronger trend probably on something like pound Swiss, because the Swiss is diving strongly and the pound's rising. So it really comes back to this whole issue of teasing it out. Here we go, we've got the crossover on pound Swiss. This is the Swiss franc at the green line. Pound rising, Swiss franc falling, we've got it here, and we've got it starting to develop over here. What I'm always looking for, I'm always looking at the extremes. You know that. I know many of you come along regularly. I'm always looking for reversals. We've got the dollar starting to sell off here. Dollar starting to sell off. Dollar starting to sell off. I'm always looking at the tops and bottoms. We've got the Canadian down here. That's going to reverse up at some point because no currency stays overbought or oversold forever. Let's just head over onto the charts just to wrap up. There we go. That one. There we go. This is the pound Aussie. Nice trend, you know, it's developing nicely. Trend monitor's bright blue. Really does help to keep you in the trade. The hardest thing to do in trading, bar none, I can tell you, is to stay in a position once you've got some decent profit in it. And that's where most traders, Forex traders, lose, indeed most traders, because what happens is, yes, you can take small losses. You might take a series of small losses. That's absolutely fine. We all take losses all the time. It's part and parcel of trading. You have to learn how to lose before you can start to win. But what makes your trading account move forward is taking the maximum profit out of a decent trend once it gets underway. And what most traders suffer with is getting out too early, because as soon as you've got a few points in the bag or a few dollars, whatever, you want to take that and secure it and lock it away and get out of the market and think, great, okay, well, I've made, you know, whatever it is. But actually what tends to happen is the market then continues on. And it is this holding in a position that is the hardest thing to do, bar none. And that's what the trend monitor was developed for, particularly using it in multiple time frames, you can see. We're now starting to see a bit of a reversal coming in. Question you've got to ask yourself is this developing into a full-blown reversal, or is this just merely a pullback? And that's part and parcel of using VPA. It's one of the things we spend a lot of time in the education program explaining to help you understand, because if you can tease that out, in other words, apply VPA to identify whether a reversal is a true reversal in trend, in other words, from a primary to a primary, or is it a secondary that is developing, in other words, a minor pullback in an otherwise longer term primary trend. That is one of the other keys to success, because that will help you identify what exactly is going on and whether you are truly seeing a reversal and therefore time to get out, or whether this is just a minor pause point. I'm going to leave it there because we've run over time a little bit. We're running nearly to the hour, so apologies for that. If you have any questions on anything you've seen today, right, sorry, I've just opened the chat box. Solomon, just answer your question before we wrap up. When trading the daily chart, would the issues of fundamental news release have a dramatic effect? Interesting question, Solomon. The short answer is obviously the closer you get to, in terms of the faster timeframes, in other words, the closer you get to the market price action, then the more dramatic will be the effect that fundamental news has. If you're trading longer, slower timeframes, you accept that fundamental news is part and parcel of your setup of your position, and that really translates into how far you set your stop loss. If you're a scalping trader, for example, let's say on a 5-minute chart, your stop loss may be, let's say, 10 points away or 10 pips away or 8, whatever it may be. It's going to be fairly close because you are trading a very tiny fragment of the price action. If you then move to an hourly or a daily, for example, where you're taking a longer term view of the market, your stop loss is going to be that much wider. It might be 50 points, it might be 100 points, it might be 150 if you're on a very slow time frame. And you accept in that stop loss setting, positioning, that you are going to allow for the buffering and the constant oscillations that are going to be part and parcel of the fundamental news. Fundamental news comes and goes 24 hours a day. Geopolitical events, political events, whatever it may be, comes and goes. And that will be factored into the price action. But you allow for that in your setting of the stop loss. It's very unlikely that you're going to trade through news items when you're a scalping trader because your stop loss will be just whipsawed out the whole time. So you have to balance it, but it's automatically balanced as part and parcel of setting your stop loss position, which will allow for that if you're a slower term time trader and not take account of it if you're an intraday trader. Of course, things come out of the blue. That's part and parcel of trading. Political events, political statements, geopolitical events, all sorts of things come out of the blue and take us out of the market. But those pre-planned events which are on the fundamental calendar, which are coming up and when they're coming up, that is the crux of the matter, is that your stop loss will automatically allow for that. So is this, Tim, so is this a reversal or a minor pullback? Well, it's a good question. It's what we cover in the program in great detail, because what you're looking at, it's one of the most powerful applications of volume price analysis. Because if you're seeing a reversal take place, let's say in an uptrend, and you're seeing a reversal come in and volume is falling on that reversal, then you can be pretty sure that that is not a reversal, it's simply a pullback. The same is true in a downtrend. If you've got a big price waterfall underway and you see the market trying to react and reverse higher and you see volume falling away, that's pretty clear. That's not going to go very far, because the crux of volume price analysis, the key of volume price analysis, is either it confirms or it is an anomaly. And that applies not only to single candles and single volume relationships, it also applies to the application of multiples. So when you're looking at volume profiles over a period of candles, are you looking at rising volume and rising price, or falling volume and rising volume? Falling volume and rising price, which is confirming. Because remember, volume, we all understand gravity. It takes effort to rise, but it also takes effort to fall in this market because it needs volume. So you need to see volume rising in a rising market. You need to see volume rising in a falling market. It's as simple as that. What we're actually witnessing, just to really answer the question, I guess, here, just move the chat box. Sorry, just close it down for a moment. Sorry, just put you to one side. There we go. What do we see under these two candles? Are we seeing a reversal, or are we seeing just a pullback? On this occasion, we saw some indecision here. We can't really infer much from that, other than we've got a doji candle with indecision, decent volume under it, but we don't know what the outcome is. But we do on this one. Why? Because we've got a deep wick to the lower body. We've got rising volume. The market hasn't fallen. It's now carrying on higher. Why is it carrying on higher? Because if this candle were not anomalous, in other words, if this were a valid candle, you would expect to see the body of the candle down here somewhere. In other words, no wicks. The fact we've got a deep wick to the lower body tells us there's buying come in here. It has to be. What else can it be? It can't be anything else. Can't be selling. It's buying. So we've got buying coming in here. So we know the market's going to rally. The market's going to carry on up. The trend monitor is holding us in anyway. We're on 5 minute. If we were trading this as a scalping, we'd have a 1, 2, 3, 4 maybe. And that would tell us also. But what you see on the 1 minute, you'd see a little reversal, and you'd see another profile to look at in terms of volume, which would give you more information also. But in terms of what's going on here, this is just simply a short-term pullback, which is part and parcel of trading. And it's what I said earlier on. A lot of traders will have got in here and they will have closed out because they're frightened of losing their profit. And what they're now looking at is they're thinking, oh, hell, I wish I'd stayed in because I've given up. This bit of price action, it looks like it's going higher now. We've got low volume up here. It looks as though we're going to carry on. What do I do now? Do I get back in again? Guarantee you, as soon as you jump back in again, the market will probably pause again, maybe get stopped out again, or get out of the market again, on the next pullback. And you're constantly taking these little tiny pieces of price action because you're not holding that position to maximize the profit from that particular trend. There we go. I hope that answers that one for you. There we go. All nice. Tickety-boo. On up we go. Very nice. Yep. Just going to pass back to Anna for a moment. Oh, sorry. I was hoping for real-time exemplary analysis. Sorry, we are in real time here. Not quite sure I understand the question. This is real time. This is live. 8:49 coming up to 8:50. We've got rising price. We've got decent volume under there. Market's carrying on higher. There we go. Hope you've enjoyed that. We will be back later on today. And if you have any questions, happy to answer them. It's david@quantumtrading.com or anna@annacooling.com. Anna will be happy to answer them there too. Also, enjoy the rest of the trading session. Thank you so much for coming along today. Hope you've enjoyed it and found it useful. Maybe learned something you didn't know before. And we will see you later on this evening our time. Enjoy the rest of the day and bye for now.